Warriors. Hi, Kevin. Let's have a great week. How's everyone doing today? William Ford, Tom, Wayne. See some new names in here. Simon, Sam. Everyone doing okay? Hi, Peter, Pedro, Natish, Matt, Leon, Qatar. Everyone doing okay? Nice to meet you, Sam. Hi, Jess. How are you, brother? I wanted to show this tweet that I got. Despite the pullback in the euro, the market is still very long euros, long 98,000 contracts compared to a year ago, short 100. And what was happening last year when everyone was short 100? Where was the euro then? Near the bottom. Just something to keep in mind. If the market's still very long euros, I'm not saying that it's over. I'm just saying that a lot of the buying fuel may be close to being exhausted. So let's look at a few of the charts here today. Starting off with the dollar. So we have this 3 drive here. We have the pullback in the dollar and pretty shallow, right? And Friday we had this weird day where the euro popped and gave it back. Dollar still looks constructive to me. Okay, it still looks pretty constructive to me unless we start closing under the 292.5. That might change the picture. That's a 4-hour. Here's the daily. I'm not saying we can't have ABC here and still hold the right shoulder. Right shoulder symmetry would be 255. We didn't quite get there. The low was 275, but close enough for government work. Everyone with me? So the possibility of a continuation move to 97 is still viable, in my opinion, unless we start closing back under 2.5. That's my view coming in. Everyone with me? You don't have to agree with me, but just so you understand my analysis here, and will give me why if you're with me. Doesn't mean you agree, it means that you understand. Okay, Bill, Tom. So last week I was talking about the euro yen and gave some levels for short positions. All the way up to 320, 330, starting at 280. So here we are right at support. Okay, to me it looks like a descending triangle. There might be a little bit more risk on. I'm going with Norm Winski's Astro date for a high in the market around the 18th. So it could be anywhere from Tuesday to Thursday for at least some type of correction. I would welcome a rally in euro yen back to 250, 270, 280 right here. Eventually a breakdown of this level is going to lead to sharply lower levels, maybe all the way down to 28.5, just a measured move. You have about a 300 pip move to here on a breakdown. Could take it to 28.5, which would be this return line here, down here, 28.5. So looking to sell rallies there. In the euro yen, I think most of the crosses could have problems there as well. Gold continues its move to the upside, even though the dollar is somewhat firm. I thought we could go to 1320. That's still possible. What is unusual, and I don't believe this coupling will last, is both gold and the bonds have been trading together for a long time. Now I've been around in the markets for at least a few decades, and it's not really a normal correlation for bonds and gold to trade together. Normally there could be fear in the bond market that could take the gold higher because bonds are considered a safe haven. But if they're no longer a safe haven, and this break that we've had in the last several weeks does not look like this is going to be a major bottom. Okay, here's your weekly on the bonds. Yeah, we have a bounce. I still expect lower levels here in the bonds, and that may be what's going to be behind the dollar rally to 97. To me, it looks like we're going to have a continuation move. It could be quite sharp. So that's going to be interesting. I'd use rallies to sell bonds, maybe up towards 27, wrong over 28 in the next couple days. And I do want to touch on some of the stock indexes. I know it's a broken record, but I do believe that we're getting closer and closer between here. There's your weekly, which is confirming. But your hourly on the S&Ps, if we get one more high, we have started to diverge. On the 1 hour, the last confirmed high was here. That's back around the 6th of October. So grinding up possibly for one more high, that's the 1 hour. Here's the 4, same thing. We're diverging here, pretty glaring, in fact. So if we get a new high into some of those dates on Wednesday, Tuesday, Wednesday, Thursday up here, I think there's an S&P short setting up this week. A lot of cycles coming in October 18th, 19th, right in here. I think even anniversary dates of the 87 crash, etc. So be alert. If you've been fortunate or naive or greedy to have been long equities in either futures or even in your 401k, I don't think there'd be anything wrong with trimming some of your holdings and moving to cash, even if this is a continuation of a long-term bull market that we're going to get higher levels of. If you don't have any ammo to buy when things are cheap, you're just going to be paralyzed on the decline instead of looking for value at lower levels. So that's my view there. EURGBP, it had a nice break last week. I don't know about shorting it here. I'd be looking for some type of rally here in the EURGBP to get short. And in fact, part of me thinks because of RSI that there might be a shot for even a new high, but to me it looks like we're wedging out here, and I'd be looking for a rally back towards 89.40 for new shorts to 89.60. Everyone see that? US dollar yen, I'm still looking for 10.50 minimum, so maybe we get this pop here in the yen. As long as we stay under 12.40, I still think we have lower levels ahead in the yen. Here's your 4 hour. So any rallies back towards 12.50, I think could be sold with stops over the high. It could even be as deep as 109.5. And if I'm right about sometime midweek, we get some type of risk off going into the weekend. The yen should continue to the downside, which doesn't make sense with what I'm looking at the dollar, but you treat each instrument as if it's its own individual entity. Don't get caught up at times like I do with correlations. But the euro yen is definitely something that still is on my radar. I recommended taking partial profits. Would love to see risk on back to 2.5. You know, you don't have to be right in 10 different pairs. I knew guys on the floor never left the same trading pit, and they were very successful. They knew one market like the back of their hand. They knew every technical area in that market. And it's my philosophy, a lot don't agree with it, that it really only takes one instrument that you have the rhythm of. And last week I had the rhythm of this, not perfect, but the rhythm of it. So there's a saying, an old expression, stick with what got you there. So this was a good trade last week, doesn't mean it's over. In fact, I think it holding the support level is kind of a hope rally that we're going to get here. Would love to see it and step into more. If you took off half, you could redeploy that on any bounce over the next few days, and your risk is above here, right above the 33.5, 33.60 level. I'm willing to field some questions. I don't think Blake is here today. I know Steve is.
I'm here.
Oh, Blake's here. He's back He's
Yeah,
back from San Diego.
I drove in last night. Yeah, how's it going, man?
Oh, wow. Good. How about you? I saw some pictures. You picked a great weekend weather-wise to be on the coast.
You know, it was a really fast trip, but it was good. It was well needed. You know, I spent Saturday at the beach in Coronado, over by the Hotel Dell, and
nice.
and Dale, you obviously living in Southern California, you've been to that beach. It's ranked
pure white sand.
Well, the sand is so fine, but the sand is like gold. I mean, it shimmers gold. I mean, I think it's, if I'm not mistaken, hold on really quick. I think it's the best ranked beach in the United States, even over some of Hawaii. So,
wow, I didn't know that. I've been here almost 20 years. I mean, it's beautiful there, but had no idea it had that kind of high ranking. I know it's like, you know, 500, 600, 700 a night to stay at that hotel.
Yeah, it makes like the hotel's expensive. We didn't stay at that hotel, and we stayed at a different resort on the other side of the island, which was a really nice resort. So yeah, it's ranked. It's always within the top 10. So
did you go in the water? Because it's cold.
It's cold. We did a little bit. The kids, you know, splashed around and had a great time. And but then I got to go sailing yesterday with one of my oldest friends, a guy that I met in 5th grade. He lives in Point Loma, and we've when he moved to Arizona when we were in 5th grade, I was the kid that had to show him around. So they picked me and said, hey, you know, this new kid, his name's Dominic. Do you want to, you get to show him around school. So, you know, I got to go, hey, all the kids hang out by this water fountain. Don't talk to those girls. You know, you play tetherball over here, you know, that type of thing. And, but we've been friends, you know, we're going on, almost 40 years. And so he has a sailboat there in Shelter Island. So he has a boat that's docked there. So as a nice, we went to the resort, where his boat's docked, and had brunch, and went sailing for a couple hours yesterday. My kids got to show you guys a picture here if I can. It'll take me a minute to do so. But my kids,
it's right by one of the best concert venues in the city, Humphreys by the Bay. So yeah, real beautiful place.
Oh gosh, yeah, it's gorgeous. So anyway, we had a great time on the boat, and then just drove back yesterday and got in at just about an hour before it was bedtime, and had a great weekend. It was, every time I go to San Diego, I think, why don't I drive out here more often or fly out here, because it's so close, and it only takes me 5 hours to drive back and forth. So 10 hours to drive back and forth, but you know what I'm saying. But we had a great time, and it was a much needed break, because my kids have been off all week, and we, a lot of people take their kids places, and we were kind of stationary because of work, because of the markets, and my wife, her work. So just taking a quick 2-day trip out to San Diego was awesome, and it was a lot of fun. It was great catching up with my my old friend and his wife and kid, and my kids got to steer the ship and everything. So it's
way to smell the roses, Blake.
Yeah, well, we tried. So I'm frankly, I'm not. I mean, I'm catching up with everything. I didn't. Steve did the weekend, the update over the weekend. He did the the video, and myself here. I'll go ahead and take over here. Myself, I'm still in a few positions from the weekend, or before the weekend. I'm short the euro yen. You were talking about the euro yen. We're really at critical support here. So if you guys see, let me just, I've been short the euro yen since last week, and I'm also short the Canadian yen, which I have a pattern in play, because we actually broke you know, this big uptrend line. So it's a breach. You can see it's a breach of the trend line here. Whoops, right there.
A lot of pips there.
Yeah, we got a lot of pips in play on Greg is quite busy right now. And then I'm also short the Aussie yen just because I like the back test of this trend line from last week, but the Aussie yen really hasn't moved a whole lot yet. But it is, you know, you were talking about Norm, and I missed Friday's interview with Norm, and can you mention to me what you were talking about as far as Wednesday goes?
He just has a major turning point days in the stock market on the 18th.
Okay, and for what
That's
reason?
what he does.
Okay.
You know, his reasons are astronomical, GAN, you know, all the esoteric stuff that astro traders look at.
I see. Okay. Well, you know, looking at the S&P, you know, this is, I mean, we're in this grinding cessation, and we've got this ascending wedge, which, I mean, realistically, we could see a bit of a reversal. I would say maybe a couple of days from now, maybe today, maybe tomorrow.
Yeah.
You know, maybe for turnaround Tuesday, maybe on Wednesday, we might get a little bit of a pullback. I mean, but this market is any pullback is bought pretty aggressively, and there's sorry, I just laughing here. It's really hard to see any major decline in the stock market as of yet. I'm still looking for a catalyst. At this point, I was reading a pretty good over the weekend. Actually, I was reading a good update over the weekend about. Let me see if I can grab the research for you. It was a good. Let me see. Yeah, I was reading this this update from a private fund, and so it's not circulated amongst the masses, and they were talking about, you know, there has to be a catalyst there. Unless we get some sort of catalyst, there's going to be really no reason for any type of major pullback in the market. Any type of 20-15 pip handle move in the S&P is just bought. I mean, you know, we're at 2550. You know, if we get to 2530, 2540, unless there's some sort of catalyst, then there's no reason. You look at you know, into the future about what could be a catalyst that could drive the market, and really it's just, you know, it's right now it's just, you know, the tax you know, tax bill, whether or not it goes through, and even if it goes through, if it you know, if it's a buy the rumor, sell the news type of thing, or, you know, you get a spike up in volatility after it passes. But, you know, I'm not expecting any big decline in the stock market. We have to get all the way, you know, if you look at it technically, you look at this structure that we're in, a 4 hour.
Under 2490, 2500.
Yeah, I mean, and even if we make it down to like 2500 or 2490, 2500, there's a lot of support down here, and we're going to have to see a really big, you know, we're going to have to see a breach of this support really to get anything going. But that doesn't mean that we can't come back and see that, and that is if you think about where we're at, that's a 60 pip or a 60 point drop in the stock market to really get any type of to even get to an inflection point where we could see any type of move. But as you know, and if you can tell with what I'm doing right now, I am prepared for a pullback because I am short the euro yen. I am short
yen crosses.
Yeah, I am short the Aussie yen, and I am short the Canadian yen. Now, the Canadian yen is really interesting to me because we are really within, I don't know, 25, 30, 35 pips of the neckline of this big inverted head and shoulder pattern. And I'm going to tell you, this inverted head and shoulder pattern on the Canadian yen is probably one of the most is one of the most, A, it's noticeable, but B, everybody's looking at it, and I would assume a lot of people are trading it too. And the problem here is we've had very limited follow through on a weekly basis for the Canadian yen. I mean, we once we broke this basically 89, we went to 91, and I mean, if you look at what you could be targeting potentially, you're targeting 103. Well, we're nowhere near there, and so anybody who's long the Canadian yen, or long Canadian currency right now, is finding it a little bit of an issue. Now, the reason why this one in particular could be quite important is because if you look at crude oil, okay, crude oil, as most of you know, we're up against a multi-year trend line. Like right now, like I don't trade crude. I don't, because it's one of those asset classes that I've never had any luck with. But if crude does stop here and it does reverse here, okay, now the one correlation that we haven't seen work is the crude Canadian correlation. I mean, if you look at it right now, crude is rallying. You would think, oh, the Canadian dollar should be rallying, but no, the dollar Canadian is moving higher. The Canadian currency has been moving lower. So if we reject this crude oil and we stop here at 52.5 or whatever, that could indeed weigh on the Canadian currency, because then you got a lot of traders that are like, okay, well, if the Canadian currency didn't go up with crude oil going higher, it might actually come down, because you got a lot of traders that have been buying the Canadian currency in lieu of strong crude oil, and they're just not getting paid. So that we call that a divergence of correlation. So on that divergence of correlation, you have a situation where the Canadian currency could really come down. That means the dollar Canadian could go, we're talking the dollar Canadian could go back up to like the high 120s if crude oil actually sells off from here. So that, to me, is something that I think that that you should be paying attention to if crude oil stops. I mean, this is big. This $52 to $53 level in crude is ginormous. It is huge, and it's something that I think everybody should be paying pretty close attention to, since crude oil hasn't been crude oil and the Canadian has not been trading in a strong correlation. They've been actually trading almost inverse, which correlations are interesting because people don't realize that they're broken. They just keep trading them, typically speaking. So you know what I mean? It's like,
sure.
Oh, the stock market keeps going up. I'm gonna sell yen. I'm gonna buy dollar yen or euro yen or whatever the case may be, or Canadian yen, and then they're not getting paid for it. So then what happens is when those correlations, when you get a reversal, those correlations really start to take hold again, which is to me always really interesting. So anyway, so like I'm still shorting some of these yen pairs. I'm really watching this euro yen. This is like the in my opinion, kind of like the
Wile E. Coyote.
Well, yeah, Wile E. Coyote could be, or really the bull bear line.
Yeah.
It's really if you get below this 131.70 level, it is bearish, and that in itself should in my opinion be very, very much paid attention to. So anyway, that's what I'm thinking right now, and so
Blake, on the crude oil shorter time frame, there are some momentum divergences up here at your major trend line, like on the 1 and 4 hour. Recent highs have not been confirming on crude. I noticed that this morning.
Yeah, well, I look at the 4 hour. The 4 hour. I mean, well, I mean,
been the 1 hour.
Yeah, maybe the hourly here. I mean, we are a little divergent at the moment.
Yeah.
I mean, and the highs are over here. I mean, and we're divergent on that move as well. So I just think this is really, really key resistance. And like I said, I don't trade crude, but if I did, this is a good risk reward. I mean, you think about it, you're risking above 53, and we might go above it a little bit, but you're risking basically above 53 to possibly make a move all the way back down to the mid 40s, and it's a good risk reward for those people that are looking at it. And I think it's worth noting and worth paying very close attention to. The other thing I wanted to talk about, and then I'll let Steve take over, because once again I'm really kind of I got home last night and I looked at the market briefly, and then I had to go to sleep, and then I got up and I've been trying to adjust levels and get familiarized with everything here. But if you look at the dollar index, we did stop at we're trying to form that inverted head and shoulder pattern, and we stopped at trendline support, which is really, really critical. So what I'm trying to say here is, as long as the dollar is above 92.75, it has the potential of holding for an inverted head and shoulder pattern, big long-term head and shoulder pattern. We start breaking back below, like, let's just call it like 92.50. We break below 92.50, and the dollar is, you can stick a fork in it. I think the dollar is going to have a big problem if that's the case. But we're closely monitoring it. I think the dollar is pretty big, and I didn't even get a chance to look at all the good the data, which we don't. Looking around, I mean, we have Yellen speaking on Friday afternoon, and we have some real estate data, or housing data, excuse me, midweek. This is not a big dollar. This is not a big dollar week for data. It's really not.
General Blake, good morning and welcome back.
Thanks.
In general, we only have CPI data from several countries that are important releases this week. Nothing else besides CPI.
Jeez, wow.
UK,
Hey,
Canadian, etc.
Steve, I got to ask you for a favor. Do you mind taking over right now? And I'll be back and just to chat with you in the next 5 minutes or so.
Sure.
Okay, I just got to step away from the desk just for a few minutes, but I'll be back. I'll be back in just a few.
Okay, mate.
Thank you.
Bye-bye. Hey, Dale. How was the weekend, mate?
Hey, Steve, how are you?
I'm good. How have you been?
Pretty good, buddy.
Okay, let me have a look at at some questions so they can get us started. We have things to show and talk about. Okay, let's see. Okay, the pound and the FTSE. Okay, sure, fine. Let's start with that. Okay, the pound stalled at the 50% fib on Friday. Today we still have an inside day, so not much momentum left after 5 consecutive days of rallying. Obviously, I talked about that in the video as well. Obviously, the cable remains in a quite choppy and slow drift higher, and we are still haven't formed a lower low, so we've been forming like higher lows and higher lows. So as long as that's the case, you cannot turn overly bearish. On the other hand, I think that last week's rally is at least in for a pause, and it can easily take a few days of calming down. Depends on what happens to the dollar, of course, as well. But I mean, if we see some further strengthening of the dollar this week, then I can easily see it at least pulling back a little bit before resuming higher. Now, the main thesis remained until last week that if we actually manage to hold the 132.50 area roughly, we would move lower. It still can happen, especially as long as we hold below 134. But obviously, the technical picture is a little bit more mixed. The only sure thing is that one very important trend line to monitor is this one, this descending trend line that passes from the 2014 and the pre-Brexit high. And this trend line, along with the trend line support of this channel, can even be seen as a big triangle. So before we can talk about a major break, we definitely need to see one of these trend lines fail to hold price action, because this trend line did play perfectly a couple of weeks ago when we got rejected at the end of September. So from this kind of a point of view, and we are currently not exactly in the middle, but anyhow we are in between. So medium to long term trade, medium to long term bias in a sense in this case, we can't really have yet. What I can say for sure is the fact that this move higher, which some people haven't realized, but it has already completed a year. So this is a formation that has taken a year to form. Is definitely not impulsive. So but just by seeing this, this does not look like an impulsive move higher. Of course, it can be the beginning of of a move higher, and sometimes move start slowly and then accelerate. But for the time being, we haven't seen something like that. So I'm really skeptical in being long. Really skeptical unless we break this descending trend line. On the other hand, last week we got a couple of news bombs that drove cable quite a lot higher after a move that initially looked impulsive. It can still prove to be. So the picture is mixed here. If I had to do something at the moment, it would still be to be short for at least some kind of a pullback. Okay. But this is one of the markets that need a little bit of patience in general. Lately, the past few weeks, we have seen price action that has been either slow in some, especially currency pairs, or quite choppy. So I think we need to give it a little bit more time. Now, having to do with the FTSE, let's have a fast look at it. There it is. Having to do with the FTSE, this is where we stand. I mean, we broke above this area. Oppositely from the cable, this move does look impulsive. After a long of what looked like to be a possible topping formation, we got this move higher, which invalidates this view, the possible big head and shoulders view. So I can tell you one thing for sure is that first of all, we are back into
hey Steve, I'm here. Sorry about that.
Hey, welcome back, mate.
Yeah, I'm gonna sit with you because I gotta get caught up. So I'll be listening in while you're
Sure.
analyzing.
Sure. So what I see here in the FTSE is that we will either have another little push higher, or just outright from here, put in some kind of a correction back to this area before moving higher again. So I wouldn't be long the FTSE here, no way in a million. But I would definitely be looking into some pullback to be long if I wanted to be, to have a position here. The area of 7,450 is definitely a good area of support. Okay, so unless we break back below it, and after seeing this kind of a move, I think that buyers are going to step in. So FTSE remains constructive. It should, if we don't have some major incident, I mean, having to do with risk, it should soon follow the rest of the indices in all-time high territory. What I wanted to say here as well is that you need to notice, and this is another strength of the FTSE, is that despite having a rally of 5 consecutive days in the pound last week, the FTSE actually kept pushing to new highs. So usually, you know, there's an inverse correlation between the currency and the index, simply because, you know, a lot of the money that are coming and bidding an index, if we're not talking about especially the
Nikkei did the same thing, right, bud? Last week, yen down, Nikkei new highs. Yes, are you adding to your S&P shorts up here? Are you looking
at
to?
2,560 is the level that I'm adding.
Okay.
And speaking of the Nikkei, since you talked about it, Dale, the Nikkei has obviously gone parabolic again. We were monitoring this, you know, this major ascending wedge, and you know, it stalled. Actually, this trend line, you know, actually played some role because it stalled price action for 4 consecutive days, and after that, we just got like this was the 5th consecutive day higher after this little consolidation that we had, and you know, this move looks impulsive, you know, no matter what, but still, given the nature of this uptrend, I mean, how strong it has been. With absolutely no pullback. I mean, if you look at it, from 19,300 to 21,300, okay? So that's, even to put it exactly in days, I mean, look at this. We have had more than 10.5% rally in 25 trading days, to be exact.
Like a blow-off.
Yeah, this is insane. I mean, it's insane, especially considering that we've already been in a strong uptrend, right? So, you know, I'm monitoring this little ascending channel here, and you know, I think that some kind of a pullback should come from here, or at least, you know, a little bit higher, like below 21,500, to at least come back and retest this broken wedge resistance. This time it might actually act as support.
You know what's really interesting about this Nikkei is the Nikkei is so strong, yet the yen is not.
Yeah. That's exactly what Dale says. Yeah, it is very.
Yeah.
And you know something, we have to remind something to people, or some people might not know it. The BOJ at the moment owns 75% of the local ETFs. 75%. It's. I mean.
That's never happened before.
In a world that functions normally, let's begin by the fact that this should have been forbidden. Personal opinion, right?
That would be like the Fed coming in and buying up spiders.
Yeah, no, right? There's a lot of speculation about that, but yeah, I mean, it's nuts. Two-thirds to 3/4 actually now of the ETFs of Japan are owned by the BOJ. I mean, this is like a huge Ponzi scheme, and you know, until this whole experiment fails, of course, you know, the path of least resistance remains higher. There's no question about it. So, you know, we will remain in this, you know, by the
BOJ, Steve, BOJ would probably have no problem meeting the margin call, right? They just go the printing presses.
Yeah, they've been printing for decades anyhow. So you know, that's not something new.
No margin call for central banks.
You never know. You never know. You know, sometimes what we consider an undeniable reality, at some point in the future, you know, becomes like, you know, a failed experiment. You know, we can say that for many things. I mean, just think of how many things that were considered, you know, certainty in economics or in other areas, you know, have now been put to doubt simply because at some point they stopped working. So I don't know what's going to be the catalyst. I don't want to know what's going to be, you know, the major development. But I doubt that this is something that's going to be going on forever. You know, in the history of central banks or economics. We'll see. This is the era of the central banks, though. There is absolutely no question about it. Since roughly 2000 until today. But personally, I believe that you know, what started like a very good way of smoothing out the ups and downs of the business cycle has ended up being the nemesis of the economies, because simply I believe that central bank actions are now exacerbating the situation. So, you know, they're making the boom and bust phases a lot more intense. But, you know, this is more of a macro conversation, which, you know, we can have at another point of time. For the time being, one thing is for sure, the Nikkei remains, you know, very strong. Any pullback to retest the ascending wedges, broken resistance, should probably once again, you know, find willing buyers, or anyhow make the BOJ, you know, wanting to buy, I don't know, another 5% of the ETFs. And, you know, this is how it is. Now, having to do with the SPX, you mentioned it. I also mentioned it in the video. Listen, the vast majority of the indices at the moment, besides being, you know, seriously overbought, are also coming on very, very important resistance areas. So, for example, the Dow Jones has had this ascending channel I've been monitoring since 2015. So, you know, this is like, not exactly 2 year, but almost 2 year ascending channel, and we're once again approaching the resistance. Okay, so this is also coming after. By the way, we've already penetrated, after this little correction, we've already penetrated the 161.8, 2 times the retracement, etc., overvalued on all time frames. I mean, some kind of a pullback from roughly here we should see. Nasdaq is also approaching now, you know, what I had as a target after we created this triangle and we broke above with the 161.8, which is at 6,145. The SPX is also approaching once again this ascending channel's resistance, which is also an overthrow of the previous ascending channel. It has also already penetrated the 161.8 and, you know, the 200% of this correction. So, you know, everything is in need of a pullback, and you know, I think that even this week we might see pullbacks. Obviously, you know, it's you know, indices have been so overbought that even if we see like 75, 80 handles of a drop, for example, in the SPX, we will still remain constructive, because you know, the first real area of support, you can call it, is the 2,485. So we can easily pull back, you know, a decent amount for today's standards and still remain bullish. So, you know, I think it's a matter of days to see such a pullback. That's why I remain short in the SPX, and I'm willing to add, you know, a little bit higher. Like, what is it now? Like only 3.5 handles left for my second position to be triggered. The DAX also, let me not forget, same situation exactly with the DAX. We've broken to all-time highs. We expected that after this textbook correction lower, but you know, it's now also due for a correction. So, yeah, you know, I
wouldn't look as strong as the S&P, does it? I mean, surpassing the highs from the summer compared to the S&P.
In general,
yeah.
In general, the European stocks were lagging for the vast majority of the years that passed, those 8 years of the uptrend we've had. They were lagging the US indices. There's no question about it. Of course, that doesn't mean that you know, that's going to be the case forever. But regardless, I also think that, you know, we're seeing some momentum loss here as well. And although I wouldn't exclude one last push higher during the week, not a big one, like a few handles in each of the indices, I really think that you know, some type of a pullback will soon come. In which case we will see again, of course, how soon or how willing buyers are going to be to step in. I mean, is it going to be like immediately after 2-3% of a move? Is it going to be like, is it going to take a little bit more? The only sure thing is that no matter what kind of metric you look at, I think that we are clearly on the last phase of a bull market, which is euphoria. Even if you look at the articles, how long we haven't had a 5% pullback, how convinced people are that that stocks are going to be higher next year, etc., etc., etc. This is the last part. I mean, a lot of the bears have capitulated in the sense that, yeah, they do believe that, this thing is going to crash, but they're like, okay, sure, it's going to crash, but who knows? I mean, I've been wrong for years. For example, it might happen next year. It might happen the year after that. The bulls, are comfortably, buying and buying and buying. So I really think that we are at some point in the last stages of the bull market, which is euphoria. Of course, this can last for months. It can last for a year. So this is not a timing indicator. It's just a general idea where we stand. And, given the fact that we've been in an uptrend for 8 years, we are definitely much, 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 much closer to the end of this cycle than at the beginning. Okay, obviously at some point we're going to see something major happening that's going to put a lot of the assumptions that have driven this rally in question, and then this is going to start unraveling one way or another. Yeah, Ronit, I agree. Something common in all indices, not this time. We are at the point where no one will believe if you call a top in market. Time is 10-year crash month cycle. Yeah, in general, yeah, that's more or less the ideology.
Yeah, the timing of it is obviously tricky. You know what I mean?
Very.
Yeah, I mean, it's like it's going to happen, and when it happens, we're all going to go, man. But it doesn't pay to be early.
And yeah, and not only that, Blake, absolutely certainly we will immediately start seeing tons and tons of articles explaining, how that should have been expected because that index was overbought and that indication was telling us, that the market would crash and that and that and that and that. But, this is like, making predictions in retrospect. I mean, we all know it's going to happen. We all know it's going to come. We don't know exactly when. And until then, the best you can do is stay out of the way. I mean, fundamentally speaking, I cannot be long indices at the moment. I consider it a naive thesis. I do not blame the people that are long because they've been making a lot of money and they might still have like 5% more of the upside, 10% more of the upside. You never know with a euphoric market.
You know what else happens, Stephen? I've seen a lot of bull markets. I'm an old timer. That all the way down, every break will be a break to buy. I mean, even in 2011 in gold from 1900, this is a buying opportunity. In 2000, it was a buying opportunity. 07 was a buying opportunity. All the way down until we're down 20, 30%, everyone's going to go, wow, this is what we've been waiting for. This is a great buying opportunity. You're going to hear a lot of that all the way down.
Usually that's also what fuels a bear market. The fact that people have been so much accustomed to be buying every dip that, the first sign of sell-off is going to be bought, and then these people are going to be taken to the woodshed, and then more people are going to step in. Like, okay, this is like this is just like a bear trap. You know what I mean? And again, and again, and again, and again, until some point the bulls capitulate. We see some kind of an acceleration, and then the stalls. And people should also keep in mind in general that the average bear market lasts 1.5 years, while the average bull market lasts, I don't know, I don't remember the exact statistics, it's 6 years roughly, something like that. So obviously, a bigger percentage of the time, the bulls are going to be on the right side, although on the other hand, we have to say the following, that always, bear markets are a lot more brutal. So for example, you might retrace within 1 year of a bear market what it took in a bull market 3 years to conquer. Okay, so the fact statistically remains that when you actually have a bear market, it pays very well to be short, but the vast majority of the time you should be long stocks and not short.
Yeah,
Now, having to do with crude, Blake, I think that crude remains, remains bullish. I mean, we had a perfect corrective move lower since we hit that high at the beginning of 2017, and since then, we've been seeing like moves higher, corrections lower, moves higher. This was another correction lower. It was channeled. So, my next target is the 161.8 that I had marked there at 53.30. And, seeing all this Iran news bombs, etc., I think that we can easily, especially through headlines and whatever else, see another push towards even 54, 55, which were the highs there. And as you also showed, this is also like a major trend line. So I really believe that, this trend line is in danger of breaking, giving away and, breaking above it.
The formation would measure 62, Steve, if we do get a major breakout. Especially
if we get geopolitical stuff happening, that's not something hard to happen. I mean, to see a $10 move in crude is not the first time we will have seen something like that, right? Nor the last.
Right.
So yeah, why not? Why not? I mean, I still don't see anything bearish with oil. I mean, it remains decently constructive. EURUSD and EUROKIWI. By the way, I need your help in that, Blake. What do you think? EURUSD and EUROKIWI. On one hand,
the Euro Aussie, and actually that I got hit in that currency pair this last week. It might have posted a false breakout. We might have a double top developing. It's one that if I didn't take a loss on the Euro Aussie last week, I would have had a really good week. But I took a loss on it because we broke through that multi-year trend line, and then we came right off again. So
the way I'm viewing this now, first of all, I was looking to buy the EURUSD. I had also said it in the chat room at 150.50. At a retest of this area and this triangle. But the fact, that it was relentlessly bearish on Friday, of course, prevented me from doing so, because it didn't look like it wanted to bottom. I mean, we had a very strong move the previous day, which was a little bit worrying, but not something we've never seen before. And then on Friday, we had a relentless sell-off that kept on until the actual time we closed. That's why we closed with a Marubozu closing black. I mean, this market didn't stop moving to the downside. Now, we are in danger, of course, of putting a double top here, but on the other hand, this can still be viewed as a flat top triangle. Yeah, as a flat top triangle, yes. Yeah. So in this case, I cannot turn outright bearish yet unless we break below this trend line. So I'm still keeping, a binary possibility open as long as we trade within the boundaries of the triangle. So, if we actually fail to hold this support trend line, then yes, I'm looking for quite lower levels, probably 144. On the other hand, I wouldn't exclude yet the possibility of a rebound, another test there and a break higher, in which case I will be probably looking towards 157, which is the 161.8 of this correction lower. So for the time being, Blake, I'm torn. I mean, I think I'd rather remain neutral and watch what happens with these two trend lines. I don't know if you have something else that you're seeing that I'm not seeing here.
No, that's it. And I know we're really closing in on trend line support. And I was actually very tempted to go long the Euro Aussie this morning. And I'm like, I'm staying away from it for right now because I just don't understand. Right now, well, I don't know what's happening all of this week, so I didn't have enough information to make that decision. But I'm looking at the exact same thing as you. It's like, well, the risk is below 49.50 right now.
And another thing that I found worrying about the EURUSD, and it holds me back a little bit, is the fact that we saw this divergence here. The EUROKIWI posted a fresh high, the EURUSD didn't. And this is something that we often see in terms of the market. I mean, two extremely correlated markets like the EURUSD and the EURGBP, one of them posting a new high, the other one not.
Right.
So you know, this is also kind of worries me. So you know, I expected a new high after this correction here. We did get it, but the reversal we got immediately afterwards, you know, it's troubling as well. So you know, for both these markets, I'm holding a very defensive stance, and I want to see what's going to happen within the next couple of days.
Yeah, I hear what you're saying, and I agree, and that's why I'm like, I almost pulled the trigger this morning when we were down at like we were down at you know 149.80 on the Euro Aussie, and I'm like, man, I should just be a buyer here and just put a stop below the lows, and I didn't, you know, but I'm still. One of the other things too, and you're because you're discussing the Euro New Zealand, is tonight we have New Zealand CPI, which is expected to come out stronger, and I'm kind of waiting for that, because if it is stronger and if it meets expectations, that could start to spur like a rate hike expectations from the RBNZ, which then in essence would push the Euro New Zealand even lower. But
on the other hand,
a miss, you
yeah,
know.
But if we get a miss on the other hand, yeah, we can see like a big, you know, a big spike in the EURGBP, definitely.
Right, exactly. So you know, and you were asking about the Aussie New Zealand. I think the Aussie New Zealand has a lot of support down here at the 109 level, but below 109 it gets pretty squirrely, and that's something that I think is a bit of a risk if we break back below 109. And that's just a basic trend line across from those bottoms, that way down there at the bottom of the triangle all the way up, that you don't have drawn out. But
we still have the possibility of like a bear flag interpretation here, right? So on one hand, we held these highs here, so you know that was a very nice rebound and the double bottom here. But on the other hand, somebody can view this as a, you know, as a correction from a first leg lower from there. So indeed, you know, the price action here is quite mixed as well. I had this trend line, which I don't like the fact that we stalled on it once again. You know, it's not a perfect trend line, but you know, we had this one as well. So I think being long there was a nice trade. But on the other hand, being long here, you know, I would like more evidence, because
Doesn't he have an ABC down to 107 and retest the breakout?
That's a possibility, but you know, another possibility that can also happen is, because with corrections, you never know. This can also end up being a triangle, right? Just look at it. Why not? I mean, we can do something like this or whatever, because this is some type of a correction. Now, what type of a correction it is, because until it proves to us that it's an impulse lower, having already broken some important trend lines to the upside, etc., I'm initially treating this as a corrective move. But what kind of a corrective move is? Nobody knows. Nobody knows, I mean, in advance what kind of a corrective move it's going to prove to be. As you said, Dale, this can prove to be an ABC. This can prove to be a triangle of some kind. Yeah, or whatever else. So obviously, this is not a point in time for somebody to be committed or to entering fresh positions in Aussie Kiwi, because I see a lot of uncertainty here.
One in doubt, out, right?
Yeah, once in doubt, out. Yes, I mean, we have a lot of markets to look at. Why should we do? I mean, why should we be desperate to do something with any specific market? Arif, you're absolutely right. Volumes are very, very, very low. Lucas says, even more important tonight, they're going to announce the new government in New Zealand, depending on the coalition type, may make or break the Kiwi. That's absolutely right. Lucas has been following very closely political risk in
yeah, it's a great point. Yeah. It's also a great point. Hey, Dale, do you have an interview today?
You know, I haven't been able to contact Konstantin Gurdjieff, and I was really looking to talk to him.
Oh, okay.
But I've tried Skype, I've tried Twitter, I've tried email. So all I could do is book them, and can't control if they're going to be a no-show. I would say a no-show.
Okay. Well, we got
I've been trying for 2 hours to get a hold of him.
Got it. Well, let's continue and address any questions that we have.
Ron here is showing the possibility of a bigger wedge in the Nikkei, this one. So, you know, this little one was the wedge we were looking at, but he's also monitoring this potential bigger blue wedge, which...
And who's this?
Ronit.
Oh, Ronit's very good. Yeah, so
Yes.
I mean, you know, when you look at it that way, what is it, 50% correction from the 89 high? Something like that?
Yeah. We're just above that. Yeah, we're just above that. Just above that. So yeah, thanks. That's a good view. And Ronit also has for us, and Luca is sharing some stuff. I'm going to show them all. Ronit is also sharing with us a view of the DAX. Okay, so this is quite an important trend line. We're banging the door here, from what I've seen. 30,000. Yes. So it's another, you know, it's another proof of what I was saying. I mean, a lot of these bull moves are currently, you know, getting on some important resistances, and I do think that being so overbought and getting some, you know, getting on some support and resistances, we should see rather soon a pullback. Luca is sharing a GBPUSD chart. Let me see. And
What great technicians we have in our community.
We
Don't
do.
you think, guys?
And
I
he
mean,
says,
really.
if this is a bull flag, may see 160 by Christmas. Definitely.
What's
and
It's a pound yen.
It's the pound yen. And actually, let me show it here from my chart, because you know, it's going to be bigger since it's not a picture. I totally agree with you, and this is exactly, if you see, this is exactly what I have on my charts as well. You know, ideally, I would want to see this being the low. Why? Because this was the broken, the broken trend line. So, plus the fact that the correction lower is still in a channel. So, in a sense, it's what I'm always calling like a well-behaved correction. You know, makes it more likely that this is a corrective move, actually. So if that proves to be the case, and this is indeed a bull flag, if you see, look, I totally agree with you, because that's exactly what I had marked. My next target actually was, you know, 156.50, if you see. And, you know, an area of interest above that is actually almost close to 163. So these are the areas I'm watching. But I'm definitely monitoring this, and this is one of the pairs I would gladly go long if we see reversal in the little corrections that we have in the yen pairs. So I'm 100% in agreement with you. Luca also says, after the recent ONS revision in the UK wage growth, we might get a revision up for UK CPI tomorrow, leading into November BOE meeting. Things looking up for the pound pairs. Yes, that can be the case, and definitely, if we do see the BOE hiking, definitely the pound will scream higher. Triangle in yen USD monthly. Okay.
And someone also made the point that the Russell was losing momentum, and that's been the leader in the
listen.
stock.
I had a friend of the webinar tweeting to me about it, and what I told him is the following: this is the Russell, okay?
Yeah.
It did almost hit this 161.8 before, you know, doing this kind of a consolidation. But I have a question for you: does this consolidation look bearish to you?
No.
Because this is the epitome of a bull flag, in my opinion.
Yeah.
You never know; it might fail and prove to be something else. But until or unless it does, you know, I'm viewing this as a very, 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 very strong bullish consolidation. And I say very, very strong because after you see a parabolic move like that, the fact that the market has been unable to even correct lower and it's just consolidating so close to the highs.
Great point.
It smells bullish breakout here.
Yeah.
So yeah, the IWM has spent like, what is it now? 2, 4, 6, 8, 9 trading days. So in essence, more or less the last couple of weeks consolidating here. But I mean, you know, this is so clearly a bull flag until or unless proven otherwise that, you know, I cannot turn bearish here.
Great point. Worked off being overbought in time rather than price.
Let me see what else we have.
This crude is really, really struggling up here at this resistance.
Let's see what VAMS is showing. Seeing the levels here. Oh, USD MXN. Okay. Price trying to reach 50% of the bearish candle at around for potential shorts. Okay. What time frame is this, Vamsi? Oh, it's a 6. Is it a semi-annual candle? Yeah, most likely than not it is. Yeah, from what I'm seeing here, MN6 probably is 6 months.
There's a macro chart.
Yeah, indeed. The most macro chart I've seen. Yeah, you're right. I mean, the USD MXN has been very, very strong, and let's show it. I know that Blake is actively trading it. It's
what?
also
the MXN? Are you talking about the peso?
Yeah. Yeah.
No, I'm actually, I haven't been long. I haven't been long since 18, which really bums me out. I've been scalping around a little bit here and there, but you know, I'm bummed out that I missed such a big part of the move.
Yeah, I think that it has more upside actually. I would like to see a pullback towards, if possible, even 1840, and then I believe we should have another leg higher towards 1940. But there is no question that the move lower was impulsive. So I would agree with you, Vamsi. I mean, I think that after seeing some bigger move higher, then it's probably a good sell. 1940, for example, is a zone I would really like to see it fail. It might happen even earlier because we have at 1920 we have the 38.2. Then we have the at 50%, which is what you're mentioning, is the 1974 level. So yeah, I'm with you, but I think not yet. Arif says too much negativity surrounding Brexit. Pound is lower for sure. Only the property market holding up the economy. Yeah, the property market is definitely holding up. You know, a lot of that is due to foreigners, especially Russians, Chinese, etc., beating the market very strongly. Ronit is also sharing. Let me see what it is because he hasn't made a comment of which pair it is. Okay, the Russell. Yeah, that it's potentially in an ascending wedge as well. Yeah. Let's see though. Let's see. For the time being, as I said, I have no reason to be in the short term bearish the Russell. Okay, that's it. I think we covered everything from the questions, etc.
So Polish zlotny you didn't cover yet.
So okay, so we call it a day, Dale, and let's hope we get some price action today to talk about tomorrow. And who do we have tomorrow for the interview?
I think it's going to be a dramatic week. It feels like we're in the eye of the hurricane here.
Let's see. Who do we have tomorrow for an interview, Dale?
Tomorrow I have Matt R. from at Panama Orange. So I've seen some of his tweets, and guy looks like a pretty good trader. So hopefully we have a show tomorrow. Then
Okay.
Jen Clapp Wednesday, Michael Storm Thursday, and Trent Orr on Friday.
Oh, we have Trent coming on Friday?
Yeah.
Okay, nice. That's
Awesome.
going to be nice. Great.
Well,
Looking forward to it.
Steve, thanks for the update. Dale, thanks for always being here, and I'm gonna get ready for my trading day.
Okay, great.
Okay,
Have a wonderful day, everybody.
Yeah, have a good one, Blake, Steve, Pace, everyone. I think we may see some real important action midweek. So, you know, sometimes the right thing to do, like, you know, one of my heroes who passed away, Tom Petty, the waiting is the hardest part. So I don't think we're going to have to wait much longer for some action. And watch that euro yen, like Blake said, sitting on a ledge. Sell all rallies, I think. Okay, and most of all, don't just count your pips, count your blessings. And we'll see you later. Thanks so much, Tom. All right, everyone. Adios. Thank you, Steve, Blake.
Thank you, Dale.
Okay, I'm trying to leave. Here we go. Adios.